The way I look at it is like a perfect form of money that, yeah, it's bootstrapping right now into a like legitimate global reserve asset. That's going to take probably another 10, 15 years for Bitcoin to be on the world stage
Yeah.
alongside US treasuries and gold as like a serious global reserve asset that like banks and sovereign wealth funds and countries even settle, in Bitcoin or hold Bitcoin on their balance sheets and their treasuries. Or even maybe, we could be in a world where there's fractional reserve banking that's like partially backed by Bitcoin. That you could see countries issue currency where instead of like 100 years ago they held gold, maybe they have some gold, some Bitcoin, basket of currencies, whatever.
Brad Mills, I got to say, you're the first person and only person that ever interviewed me where I was so inebriated that I basically haven't been drunk since. We were in Cabo, and we were both attending this thing called Mastermind Talks, and we had been, I don't know about you, but I'd been drinking in the pool, so much so that when I checked out of the hotel, I'm like, what's this $470? In the middle of the day at the pool, they're like, that was drinks. I was like, no, that's why I forgot. But I usually talk too fast. I talk so slow in that interview because I was just, and I said, please don't air it. I can't imagine what I said because I don't remember, and it had to be very slow. Somehow you rolled with the punches and kept interviewing me. And so the good news is I'm sober today. I've pretty much been sober since that day because that was like a retirement of drinking way back October of 2019, I think. I sound like I'm an alcoholic. Went through AA. I didn't even drink that much, but I drank a huge amount that day, and
That
somehow
day,
I stopped drinking
Herculean.
at like noon and was still drunk at dinner that night. Brad, that's what happened. And
Man,
but
you're a big guy, and I figured, okay, maybe Garrett can just like synthesize a ton of alcohol, maybe because I was getting a little tipsy after two Zambucas, but you're on like your 16th drink, being like,
it was bad.
yeah, man,
Yeah,
we're gonna do the podcast. Sure, I'm just like, are you sure we're gonna still do this interview? And you're like, yeah, let's do it. I tried to edit it,
I
and
just wasted 2 hours of your life. I just threw
it was a
two
good
hours of your
warm up.
life away.
It was a good
Yeah.
warm up, but
So
I tried to edit it together, and I had to actually increase the speed of your voice by 1.5x, and it was
yeah,
still too
which no
slow.
one has ever done ever with me. I'm usually talking way too fast.
So
But
it's a good
Brad,
thing we canned that one, and we
you're a
redid
pretty
it
early
sober.
adopter of this whole Bitcoin movement. I mean, because I remember at amazing.com, I spoke way back in the day. I'm guessing it was like 2014. And somehow we
Yeah, a
were
while
like on
ago.
Facebook Messenger, or so, who knows, like how we were communicating. And then you were telling me about something I should look into. And I didn't listen really at that time. I waited much longer and got involved much later. So thanks for doing your best. But today, I figure there's a lot you could teach people, especially right now. I mean, there's a lot of chaos that's happening in the crypto world in general. I feel like I've been at events where you're handing out $100 Bitcoin gift certificate. Was it like a little gift card of Bitcoin? Like
Yeah,
you're
the
all
100.
in, you know. And then when I once mentioned an NFT, you almost disowned me, stopped talking to me for a while, and told me I was a fraud. And here we are today. So there's how about that for an introduction?
Sounds good, man. Yeah, no, it's definitely like a passion of mine. It's part financial activism because of seeing the fraud that sort of happened in the regular markets. It turned me into kind of like a activist Bitcoiner in 2011 when I found out about Bitcoin, because I was learning about bailouts and the history of money and who controls the financial system, and how, you know, risk is always never flushed out of the system. It's always just, the taxpayer ends up footing the bill, and
Totally.
the wealth inequality just keeps going higher and higher as they try to like bail out the markets. So it turned me kind of against the traditional market, stocks and bonds and money itself, and into like, well, there's got to be something better that's decentralized that somebody can't screw around with. So I got into Bitcoin back then, and through my Bitcoin, many cycles in Bitcoin, I've seen these like marketing narratives come and go of the different altcoins and blockchain technology and crypto and NFTs and all this stuff. And I always see my friends get sucked into it in some way or another. So it's like, I almost feel like, oh, I'm like super excited when I see, oh, Garrett's got Bitcoin. He's starting to learn about Bitcoin. So exciting. And then he's posting JPEGs as an investment vehicle. And I'm like, what is happening? No, like, how did I lose control of this situation? So yeah, I internalize it. But I wanted to bring also like introduce you to my friend here, American Hodl. He's also somebody that's been in Bitcoin a long time, influential on Twitter and like in, you know, as an investor and also like just an educator in Bitcoin. Also like American Hodl and myself are both people that kind of got wealthy because of our conviction in Bitcoin and learned about proper risk management and diversification and like the different strategies of researching like what did the Rockefellers do or whatever about how to maintain your wealth. And I just figured he'd be a great guy to bring on and have you guys chat as well on this
Yeah, we
whole
chatted a little bit before, and we were
Totally.
having a good time, having some good laughs. So, you know, there was no educational pieces anyone missed. It was just us saying inappropriate things. So, so that's fine. I'm sure we'll even say some of those along the way here. And look, I will say it takes a certain like mindset and breed for someone to get as an early adopter into Bitcoin because, you know, some people think like it was a happenstance and people got lucky. I think that's a rare number of people that got lucky. I think a lot of people actually had intelligence around what the system could be. Maybe it ended up being bigger than some people thought. But ultimately, I mean, as you mentioned, centralized banking is a problem. I mean, you have private bankers that we don't know what's happening inside this centralized bank that's issuing money, printing money, or adding it to computer screens. And, you know, when they do things like quantitatively ease and just push a bunch into Wall Street or into banks, and then you're talking about redistribution of wealth, that happened, and then, you know, creates an inflation that all our money is worth a lot less, but it's not a big deal for the ultra wealthy because they own so many assets or they own the central banks. And I also find it comical when everybody talks about how rich someone like Jeff Bezos is or these people. I'm like, if you knew anything about centralized banking, those people have small amounts of money compared to the people who control the money supply, essentially. So decentralization is something that I want you to define a little bit, talk about, and, you know, just 2011, that's pretty early. Did you lose any of your money on a Chinese exchange back then? You know, did
Yeah,
you
man,
buy
I
it in a
was
McDonald's parking lot? Like, how did you get Bitcoin in 2011, Brad? That's what I want to know.
it was both mining it, performing favors in parking lots, and buying it
That
on
sounds really like
regulated.
America and I could just crush you on something like that, right?
So good.
Yeah, well, I definitely lost Bitcoin early. That's why I feel for a lot of the people that fell for all these Ponzi scams in 2021 and 2022 that are now just like losing all their money, and we're reconciling all the bad information and terrible
What
logic that
percentage
got
of coins
pushed
are
out.
shit coins and nothing? Like I always say 90%, but is that a low estimate?
No, it's much more like 99.9999%.
Got it. Yeah. Okay.
Yeah. Quite a
Yeah,
few. Quite a few.
like there's a million tokens at this point. If you go to coingecko.com, it's like got all the tokens, and there's a million. Like people say, oh, there's 20,000. There's a million. There's more than a million. And literally, like, there's significant majority of them are absolutely garbage, like worse than penny stocks. And then some of them are just well-funded pump and dumps that Andreessen Horowitz and other major influencers and even banks are propping up with, like, you know, ESG narratives and bullshit that like is a scam in some way.
Okay, ESG. Come on with all your acronyms. ESG.
Hodl, you want to describe the ESG scam?
Yeah, so ESG stands for environmental, social, and governance. And
Oh,
the
yeah, I was
environment,
on a panel and they asked about that,
right?
and I was like, yeah, that definitely going to be a lot of BS that comes along with
The
that.
the environmental part is pretty clear. You know, I think we all understand what the E stands for. I couldn't tell you at all what the S and the G stand for, not even a little bit, right? You know, so ESG is basically a marketing scam that, you know, is perpetrated by Larry Fink and BlackRock and some other high-powered individuals, you know, who have a position, you know, a high perch in these markets, and they can basically force these mandates on companies. And it's sort of an effort to greenwash these companies and make them look like they're doing good for the world when they may or may not be. I'll leave it up to the viewer what's really going on.
Yeah, so like ExxonMobil has a supremely high ESG score, where somebody like Tesla is like not really considered ESG, which, you know, like some people, whether or not Tesla stock is a good investment, it's not about that. It's about clearly Tesla's trying to do something. If ESG was a real thing and we're talking about the environment here, clearly you just think logically that, okay, well, Tesla's building out reusable rockets and electric cars and solar power. innovating in solar power. So they're probably working towards this climate agenda. Well, not really, because ExxonMobil and these big companies, BlackRock, et cetera, they fund a lot of research, and that actually gets them to be able to buy
They know how to
carbon
game
credits.
the system, right?
Yeah, they
know how
game the
to get
system.
scores. Like, hey,
Yeah.
you know, they have the answer key, and they go, okay, we do these things, we get some attaboys and you know, good marketing and favor. So all these crazy things that have happened in the exchange recently, like, you know, massive exchanges going under. Like, let's talk about that. Was that predictable, a complete surprise? Were you warning against it? Like, what
Nobody
happened
saw it coming, Garrett. Nobody could have seen it coming. This is what the crypto people will tell you. Nobody could have seen it coming. Hodl, could you see it coming?
So Brad's being totally facetious, and
I figured, which is how
Brad
it is.
Brad is one of the people who detailed what was coming in explicit detail better than anybody else, and he's been putting out the information for months on Twitter. It was easy to see what was going to happen when you gave a bunch of kids in their 20s access to infinite tokens that, you know, had multi-million-dollar market caps that were, you know, had pictures of dogs on them, and then a bunch of Adderall to trade with. Obviously, things were going to go bad, and they did go bad. And, you know, we're now looking at the FTX debacle is a case of, you know, widespread criminal fraud. Looks like there's a $4 to $8 billion hole in the balance sheet over there, and they were using customer deposits to trade against their own customers. So widespread criminality, and, you know, we're going to see it play out over the next couple of years. Hopefully they'll be brought to justice.
Man. So even
and it goes back, Garrett, to way before, like, this whole crypto blockchain narrative is pushed by the same insiders that have the asymmetric information in the traditional markets. Really, when you look at venture capital in Silicon Valley, it's kind of an insider circle jerk Ponzi scam.
Right, that's why GameStop was hilarious, right? They're like, we need rules against this. I'm like, what are you talking about with your backroom deals that have been going on for millennia? Like, and now you're mad that this got democratized a bit, you know?
Yeah.
Imperfect. It's like you got beaten by your own rules because there was enough money through masses versus just a few people that had all the cash. But like, I've been outspoken against the stock market for a very long time. I think it had a pretty noble purpose originally. Hey, we have a big idea. We want to raise capital in order to make this idea happen. And before we had the technology we do today, it was very effective at raising funds. Now what it is, hey, how do we extract value from the consumer and exit from something? A lot more than it's raising funds. And so we've seen that with private companies.
100%.
And then it just, when we get to ICOs and stuff, it was just even more fraud because there's less regulation, which I don't know that regulation is the answer by any means, because the regulation usually favors the backroom deals when it all comes down to it, and ends up creating a lot of bureaucracy. So just another case for Bitcoin, I guess.
No, these things are all interconnected, and, you know, the core of them is the inflationary, easy money, quantitative environment that we find ourselves in. And when, you know, mass amounts of liquidity get pumped into the system, you know, people are searching for a place to hide from the devaluation, and it ends up pushing them further and further out on what Brad likes to call the risk cliff, what other people refer to as the risk curve. But like, it's a cliff because eventually you Wile E. Coyote yourself off the edge and fall to your death, you know? So when you find yourself buying pictures of monkeys, and then, you know, being like, well, of course this one's worth $500,000. I mean, why wouldn't it be? It has a cute hat, and he looks like a proper gentleman, you know, whatever. You may have gone too far. This might be your brain on inflationary currency, you know?
So I do have, I'm a Prism member of the Aokiverse, so I'll let you guys pick me apart a little bit on this. But I'm going.
Even I don't know what that one is, Garrett. You're going far down the rabbit hole, man.
That's Steve Aoki, the DJ.
Yeah.
Created this, you know, basically levels, and now I get to write a song with him. I'm able to go hang out before the show. I'm able to, you know, do different things that gives me access, and I like that I can now do that versus not have that access before something like that happened. I don't know anything about which JPEG looks prettier than the other, or will hold more value in the future than another. That's not my area of expertise. But this Aokiverse was basically like, hey, here's an artist who I admire and enjoy, and I want to do music, and I was able to like get this NFT that gave me access. So,
Well,
what is that worth? Probably whatever I'm willing to pay for it, or someone else, I guess.
So this is where the conversation has to get a bit nuanced, because there's almost like this is like an affinity scam, which has happened time and time again. Like there's something legitimate there, but it's layered on top with Ponzi-nomics and like really unsavory like characters promoting it. And it just takes advantage of people. And you get to the point where you get people borrowing money to buy JPEGs because they're actually just speculating. And
right.
most of the NFT market, and including like
it's the digital gold rush now, right? 11 out of 12 of people that went west for gold didn't get it. 11 out of 12. That's a pretty, and 1 out of 12 died in a young age pursuing it. So
yeah.
And in post the gold rush and post the oil rush and all that, there was severe regulations that came in, and the market got tamed, and all the people that made all their money kind of just were okay, but all the people that lost all their money were screwed. And we're seeing that now in the collapse of the NFT bubble and the DeFi bubble and the crypto bubble. A lot of this stuff was just fake value, and it was speculative. It was a speculative mania fueled by venture capitalists and celebrities piling billions of dollars into literal Ponzi schemes and terrible ideas that shouldn't have been allowed. Like the SEC was very clear after the collapse of the last bubble that all of this stuff is securities. And if, like Steve Aoki verse thing, like I'm not saying he's a bad guy or anything like that, but he didn't need to do an NFT to give you access to write a song with him. Like this is just something that it was a trend, and influencers were sold the idea that you should make this NFT, which is basically like a token that gives you access, but only because the artist says it does. It's not like this. They financialized the NFT, and not necessarily the use case of Steve Aoki's access token, but most of the like 99.9% of the rest of the NFT market, and even to some extent these influencer tokens and stuff. It's a bad idea for people to issue these things on a blockchain and like kind of like normalize the idea that you should financialize this and trade it on a liquid market, because then you get people that are grifting heavily, like Gary V, going and doodling and selling them for like hundreds of thousands of dollars and being, looked at as like the #1 artist of our generation now because he did a bunch of doodles and sold them to people. What happened in 2021?
Because of the doodle or because of the access to Beacon and the education and the, time?
No, I think honestly, dude, I think it was like 100% of it was speculative mania. And like he was purely honest about that. Like he likes to go in these videos and say like you're gonna lose all your money if you do NFTs, like, but buy mine, and like here's the launch, and he pressure salespeople into buying the NFTs so he could get his book #1, the book he's launching #1, like get access to the VCon. And I mean, it was a lot of like high pressure sales. What's the adjacent advertise? What was the term you were using yesterday, Hoddle? Marketing adjacent.
Surrogate advertising, right? It's very difficult to cash out as an influencer. Everybody thinks influencers are living this dream life. Most of it is a facade, Garrett, I'm sure you know that. And it's very difficult to monetize your value as an influencer. So this NFT thing, it was an easy money grab for a lot of these guys. And I do think that there is some, interesting bits of technology there, like access tokens. I could imagine that in the future, tickets, maybe hotel room keys, these would be NFTs, but like that definitely doesn't justify like, a multi-$100 billion bubble. And, basically it was a .com era thing that we just lived through.
Part of it is like,
right?
When crypto got lend down, when you could go borrow against any level of crypto, like what hasn't been a bubble from borrowing? Like, look at what happened with real estate. Like anytime money is cheap and they're like, oh, look, I've got all this appreciation in my coin, I can get a loan against 50% of it. I don't have to pay tax. Like that inevitably, plus they're going, well, I'll just buy more, or I'll buy this other thing, and
well, and then
the
look
narratives,
what,
the narratives were sexy. They were good at selling it.
Yeah.
The
like Fed jacked the rates. The Fed jacked the rates faster than they ever had, in recent history. And what happened as soon as they did that, monkey JPEGs go to zero, you know what I mean? I do think that one thing I was saying about the NFT market is I think media is a hits-driven phenomenon. Anybody who's paid attention, but when the bottom and the middle of the market are weak, really you're not going to have a lot of extended value there. And so the top of the market, if you basically have like a crypto punk or like a Bored Ape, like you're probably going to survive that. You know, people still pay thousands of dollars for Beanie Babies on eBay to this very day. But if you have one of the other, you know, projects down here in the middle of the bottom, like you're fucked. Those are going to zero. I don't know if I'm allowed to swear on here, but it's going to zero.
Yeah. Yeah, it's funny that you say that because I just finished a comedy tour, and my first tour I was PG-13 because I grew up in Utah. I'm not Mormon, but I'm around all these Mormons all the time, and so like I was always worried about swearing. But like Brad's hung out with me one-on-one. I have a fucking terrible mouth. I can't help it. I just enjoy it. And so the second time around, it was like completely whatever came to my mind, whenever it came to my mind, and it was like a lot of fun. So yeah, it's okay to swear.
Totally.
That's one of the reasons I love my wife so much. She has the filthiest mouth, and I just think it's amazing. I just think it's beautiful. So Bitcoin, let's talk about Bitcoin. Well, first of all, let's talk about these exchanges that just basically, they're gone. Yeah. Hacked, maybe by the very people that created them. You know, tons of fraud involved. You know, sounds like Brad, you've been
thanks, Matt Damon. Thanks, Tom Brady.
Matt Damon told us to be brave, and now we're broke, you know, so thanks, Matt Damon. No, I mean,
those were weird commercials, man. Like, it was really weird to see those guys on those commercials. It's Steph Curry too, right? Like, doing his commercials. So
Larry David had the last laugh because at the end of the FTX commercial, he goes, "Nah, I think I'll pass," and that is now prophetic. I mean, that's like an immortal ad; it'll live forever, right? Because FTX is totally bankrupt and insolvent.
Yeah, totally. Like Damon, Tom Brady, Steph Curry is like, hey, we'll just use people that probably know nothing about any of this, but we'll pay them enough to make you think that they can.
And the insidious thing too, Garrett, about that is, and what frustrated me the most about this is like Bitcoin is the most important kind of technology and movement and revolution that
is it the only decentralized one, Brad?
It is really the only decentralized thing. It's the only thing that's government resistant. That's the importance of Why do you want decentralization? Well, it's because it needs to be government resistant. And like it is, when you really put in the work of understanding Bitcoin and money, billions of people in the world live under capital controls and financial oppression. They don't have access to like deep liquid markets and a safe currency that like relatively we have in the West. We have, you know, like our currency is inflationary, and it's definitely, there's a problem with the Gini coefficient, and there's a huge increasing wealth gap, and there's insiders getting bailed out and making money dumping things on public markets. But like we have monetary privilege compared to somebody that lives in Lebanon they just froze their bank accounts, and you're taking a 50% haircut on your dollars in the bank. So like this frustrates a lot of us Bitcoiners because we're trying to get this message out. We're trying to educate people. We do believe that this is like a once in a lifetime generational wealth transfer opportunity to take control and actually have, like, even if you just have $500 to a high net worth individual that has like $1 billion, you have the same access to this tool. And it's so important, we believe, to like push this message out. And then when this crypto bubble happens, fueled by the same insiders that turned Web 2.0 into a hellscape surveillance panopticon where everything, you are the product.
I don't even know what you just said, but you know,
it's like, you know, well, it really is like Andreessen Horowitz and all these tech founders.
I just want to know what it is that you
think about, I'll do it succinctly, Brad. So, you know, Web 2.0 was like, you know, Facebook and Instagram and Google, and all the products were free. It was amazing. The growth, you know, so awesome. There was no censorship. And it turned out that you were the product because you weren't paying for anything.
Your data,
exactly.
Exactly.
And then once we have you trapped like rats, we do whatever we want to. And that's what happened to us in Web 2.0.
For advertising. Now we're censoring. Now that you've got the morphine and you keep wanting the hit of it. Yeah.
And these insiders do this Silicon Valley circle jerk of like basically being the ones that make these markets, dump them on top of retail investors and make billions and billions of dollars. Well, Bitcoin comes along. It's a decentralized technology. It's a once in a species invention that allows us for the first time to have like a perfect form of money in a digital era. And what do? They say, oh, well, actually, let's create Web3 we'll call it Web3. We'll copy all the technology that Satoshi Nakamoto created with Bitcoin. We'll print our own money. We'll pre-mine it all, and then we'll say this is yours. This is like the people's internet. So the whole bubble was fueled by the exact same people that funded Facebook and Google.
Yeah.
And then they called it Web 3.0, pre-mined everything, and put billions of dollars of 1.1% of the elite of Silicon Valley VCs that made their billions already. They just recycled it back into NFTs, DeFi, crypto, and these exchanges, and made their billions again. They just made tens of billions of dollars in the bubble, and it's confused everybody. And now we're in this.
We got to make a point right now on this, because this is where the world gets super confused, and it's not confusing. Nobody loses money. Money's transferred.
Yes.
So people believe that money was lost. No. It was just moved into someone else's account, and you didn't know who it was. And it was fewer people with larger dollars. So all this is like going and playing poker in Vegas and being like, sit down at the table. You don't know you're sitting with the World Series champions from previous years. They're letting you win. You keep feeling like, dude, this is easy. I just bet, and the money comes in, and then when there's enough chips on the table, they finally take it. You go home and tell everybody you lost, but no, that money's still in someone else's hands. And so I just think that that's really important for everyone to understand. As simple as that sounds, it's terminology that has evaded us from logic for decades and millennia. It really is like, okay, well, that money's lost. No. It didn't disappear. It didn't just go away. Someone has it, and you just don't know who that someone is unless you do a lot of research, and then you go, oh, there's where it is. It's a very few people.
Garrett, I'm so glad you said that. And just to, boil this all down in a very concise manner, what this comes down to is trust, right? And in Bitcoin, you do not have to trust third parties with your money. You do not have to trust a bank. You do not have to trust an exchange. You do not have to trust a brokerage. You have the ability to take self-custody of your own funds. And, it takes a little bit of skill to learn how to secure cryptographic secrets because, frankly, let's face it, this is not something that humanity has wrestled with before. So there's a little bit of a learning curve, but it's not crazy. Right. I mean, there are these little devices. They're called hardware wallets. They cost $100. If you can follow the instructions and sit down at your computer for 30 minutes.
I set one up this morning. I set up a brand new one this morning by myself, no instruction other than clicking and reading, and everything went swimmingly. And I'm an old man. I'm inept with technology, and I did it perfectly fine. So if I could do it, about anyone could do that.
No, absolutely. And that is the, evolution in the history of finance that has happened here is that we all have the ability to take control of our own money, have our own self-sovereignty, and decide where our wealth is secured. And, first, I'll be honest, this is a scary thing. It's scary to take control of your own wealth, right? Because if you fuck it up, there's nobody to call on the phone and be like, hey, where did it go?
First time I sent $1. I did $1. I was like, okay, that showed up. Cool.
Exactly.
I can send the rest. Now, by the way,
go ahead.
I want to say in centralized banking, this house I'm standing in right now, I took my older son, who's 17, to the bank to say, I'm going to show you how this wire works. I'm going to wire money for the down payment on the house. It should take 20 minutes. After 45 minutes, I had to leave to take him to school because they were calling people. There was no way to do it from the branch. They had to call and get approval. Even then, I had to do 3 different times to go in there to get that transferred. And then I did another transfer. I was wiring into Coinbase, and then the bank it was being wired from, the amount of rigmarole and back and forth for something that used to be simple, it is so ripe for disruption, man. It is so needed because it's just getting worse to get access to your own cash that's being devalued by the day, that there's fractionalized banking behind it and centralized banking that creates that, and all that you have no idea. We don't really know how much money was printed. And the money isn't even printed. Let's face it. Are they really printing trillions of dollars, or are they just pushing a button on a computer screen with, that's it. Just okay, yeah, we just added that, right? So I just think that, but Brad also said that it was perfect. So is Bitcoin really perfect? I mean, if too many transactions happen on the block, it could become kind of messy there, right?
Well, the way I look at it is like a perfect form of money that, it's bootstrapping right now into a legitimate global reserve asset. That's going to take probably another 10, 15 years for Bitcoin to be on the world stage alongside US treasuries and gold as like a serious global reserve asset that like banks and sovereign wealth funds and countries even settle, in Bitcoin or hold Bitcoin on their balance sheets and their treasuries. Or even maybe, we could be in a world where there's fractional reserve banking that's like partially backed by Bitcoin. That you could see countries issue currency where instead of like 100 years ago they held gold, maybe they have some gold, some Bitcoin, basket of currencies, whatever. But just to say that right now, currently, what HODL described as this is the first real, time in history, aside from owning gold or something physical, that you can take a digital native form of digital scarce property and hold it yourself with no middleman. Bitcoin does solve that problem. And we're building out the ability for the rest of the world to use Bitcoin, where billions of people can treat Bitcoin as their unit of account, their method of exchange. But that's not going to take, 5 years or something. The Lightning Network is an amazing piece of technology being built on top of the base layer of Bitcoin. So the country of El Salvador has adopted Bitcoin as a official form of money, and they're using integrating with the Lightning Network. There's tens of thousands of people right now building on top of Bitcoin. We don't get as much excitement or as much investment or as much buzz as like crypto and DeFi and Web3, because there's no token grift attached to it. There's no way that you can do that VC insiders game and like print tokens and then make them go up 100x and then cash out on retail FOMO. Really, like Bitcoiners are building actual technology, peer-to-peer protocols with no token stuff attached to it that will power this perfect money of the future. And you're like, by buying Bitcoin right now and holding it, it's almost like recognizing the importance and the value of, say, Facebook to the social networking or the advertising or news network that ended up disrupting the rest of traditional media. Buying it when it was like, you and two of your friends writing graffiti on each other's walls, buying Facebook stock. I mean, right now at the value of Bitcoin, it's like 300 billion or something. We're talking like Bitcoin could be 10, 20 trillion market cap up there alongside gold and other serious assets. It's going to take a while. So right now, I think it's not yet quite like seen its complete purpose be served as a perfect form of money, but I'm betting that it's going to get there, compared to the other options that we have.
I'd say it's more analogous to buying a piece of the internet in the early days of the internet. Like, say, we're probably at about let's say 95 to 97 in terms of internet adoption. And if you remember that era of the internet, it's like reading a GeoCities website where some guy is like, hey, did you know that Paul McCartney died and was replaced by a fake Paul McCartney? And you're like, is this true? I don't know, but this is a great website, right? Like we're about that era.
Every commercial had a website on it, and then you'd go there and it would like take 15 minutes to load and it would be a phone number. No, but I mean, look, you introduced me to Alex, and his argument on like human rights with Bitcoin, Brad, is pretty like compelling and phenomenal, and definitely was another thing that was like, okay, it's so compelling and convincing. But also, I remember this guy years ago. I was in Miami in like 2016, and he was making the argument of Bitcoin versus gold. And he's like, there's two more properties that Bitcoin has that gold could never have, and including like where you could access it pretty much from anywhere, or carry it on you in mass quantity without it having any weight to it. Or I mean, there's so many things that were compelling. Yet I'm a slow adopter. You're an early adopter, and but I'm coming around. I
have a pretty easy mental model for this. About the point you just made about Bitcoin being 100x improvement on gold, and it's that essentially we've had these. Gold was really humanity's only money for 5,000 years, and then we had a bunch of shadow gold standards, and some would argue that we're still on a shadow gold standard today. I probably would, right? And gold was a fantastic technology for transferring value through time, but not necessarily through space, which is okay because human beings had wooden carts with wooden wheels and they weren't going very far, very fast anyway, right? Yeah. And you just get a 3,000-pound animal to drag your heavy gold around, to the next castle or whatever, right? And then we had fiat as, the information age sort of took hold, and we had telecommunications, and fiat was a tremendous technology for moving value through space. but not through time. So suddenly we could wire money from New York to Tokyo or Hong Kong or Singapore, or wherever. But it wasn't very good at storing value because it was inherently inflationary. So over time, you lost a lot of money. And, this has pushed investors out on the risk curve. And, it caused a lot of those problems in equities you were talking about earlier, because people are using equities as a de facto store of value. Now we have Bitcoin. Bitcoin is both a tremendous technology for moving money through time and space. And that's one of the big things that's happening here.
So
See, I told you it was good to bring this guy on, right? Like, aren't you glad I invited Hodl on?
Very glad. Yeah, definitely happy about this.
See, I could rant for 20 minutes about it, and he can sum it up in like five seconds with that brilliant analogy.
I'm here to be the Brad whisperer. I take what Brad, his knowledge, and I transport it to the masses.
Yeah, I mean, it's interesting that people really still don't understand a lot about Bitcoin. They were just speculating on buying it and still translating it into dollars. Like, I don't think Brad's translated it into dollars for a long time. Like, he translates probably everything into Bitcoin, right? Like how many Bitcoin that is versus how many dollars that is. And
I mean,
everybody's still wanting to cash out their Bitcoin for dollars because they thought it was going to be this, like real estate, where like, I'm just going to buy, I'm not going to rent it out, and I'm just going to sell it to someone else in the future, versus being like, no, this is a new way to handle money. And the way because I have a book right back here called The Ascent of Money. I think you guys would really enjoy that book because it talks about the history of money throughout, the centuries. Yep. and how much every single time, it ends up being abused and governments ruin it, and, centralized. But it like goes through that entire thing, written by like all these Ivy League professors. So it's like very matter of fact, and not very, like, it's hard for someone to say, this is conspiracy theory, because it's just like, this is what Spain did. And, you know, I mean, every time I start talking about central banks and fractionalized banking and quantitative easing, I sound a little bit crazy, but it's evidenced out there with inflation. It's evidenced out there with exactly what happened and the way that this whole thing worked. And that's not even to mention, the amount of government spending, which people think is the bigger problem. I think the bigger problem is just private banking in general. Just centralized banking is a much bigger problem.
Well, Garrett, I'm glad you brought up the historical examples, and I agree with you. And I'm a nerd. I like to dig into that kind of stuff too. And the big lesson that keeps repeating over and over again in history is that when a culture with a hard money or hard currency meets a culture with a weak money or an easy currency, they get destroyed and enslaved by the culture with the hard currency, right? And so when we're talking about the importance of the monetary change over here, and we're telling you like, hey, listen, Bitcoin is 100x improvement on gold, it's something that you want to take seriously. Whether you come to the same conclusions as me and Brad did or not, it's still something to be investigated.
Yeah, I mean, I mean, again, slow compared to you guys, but like, I mean, I look at it like, if people have read my books and followed me since I started in finance in 1998, I was kind of the person that was like, hey, let's question the stock market for a minute. Let's question mutual funds. Is this really what they say it is? And let's unbundle this and take a look and see what the real results are. And, what is it that the wealthy people are doing? They're focusing more on saving tax than they are on chasing some individual stock return. They're issuing stocks, not buying stocks. And then now I'm in a place where I'm like, hey, I'm a little bit older, and I'm going, I would put my reputation on the future of Bitcoin, because it is a system that solves so many of the problems that are out there. And I also say that it will be volatile, and I don't know how long it will take, but it's something that, I look at as a monetary system for my family, for future generations. And I look at all of the problems we've had with money. It answers many of those. But it's so early, like you guys said, it's almost like 95, 96 internet, that yeah, you're gonna have wild swings, and you're also gonna have copycats, and you're going to have all this other attention, and you're going to have all this chasing of returns, just like you see in any market. How many people chase the returns of real estate when it's going up, which half the reason it's going up is low interest rates, not necessarily fundamentals. And so, what do you have when everybody started putting their money in the stock market in the 90s because retirement plans became very popular, is the stock market had an unprecedented rise from 1990 to 2000, partially because of the amount of funding that was going into it that inevitably pushed it up. Sure, there were some economic fundamentals there, but the reason it couldn't sustain was there wasn't the fundamentals to keep that going long term. And so, yeah, you know, having a meteoric rise from especially 15,000 to 65,000 in a pretty short period of time, that's pretty hard to sustain on this new of a currency. It doesn't invalidate the currency. It invalidates the process of pumping it with a bunch of people that know nothing about it or the utilization of it, and simply are just trying to scrape some type of return because they were shamed on social media or because, you know, whatever it might be. So,
yeah.
A lot of it too, Garrett, was, you know, it was like the competition from the VC crowd that propped up kind of artificially, whether you want to call it artificial or not, but they kind of did the same thing they did with the Web 2 technology, where they raised all these funds and they wash traded and market made like FTX, all of these VCs,
in gold and silver all the time too, right?
or
Certain
even
narratives, certain trading.
Mm-hmm.
So all of these guys were kind of complicit in this whole like crypto bubble, this craziness with dog coins and JPEGs and all this like real nonsense that we saw happen in 2021, because they normalized the idea that, okay, Bitcoin is too expensive, but look what's exciting here. NFTs are like this life-changing technology, and DeFi is a way to redo the financial system in a more fair way. And honestly, it's all just marketing narrative on top of like the same grift that's happened in the previous cycles with the stock market. In the derivatives bubble in the 1990s, you saw the exact same sort of thing that just happened last year, where the Orange County was like investing municipal money into these crazy like synthetic overseas bubble.
The wealthiest county gets bankrupted over,
and they go bankrupt when it blows up.
Right.
So Wall Street banks made billions off that crazy derivatives bubble that happened in the 90s. And there's a great book, if people want to read a book, it's called Fiasco by Frank Portnoy. Amazing story of the inside take of how that thing, the whole thing started. And I remember when I was like living through the last 2 years, like pulling my hair out, seeing this thing happen again. They're just they're taking the exact same toxic nonsense that they've done a few times on Wall Street in the last 50 years. And they did it on blockchains, and they called it innovation and painted this Web3 picture on it. So it made you feel like you were being part of some revolution or some movement. And it's like, while we said earlier that some of that is like genuine, a lot of the people that came into the bubble, there was tens of millions of people came in through NFTs and DAOs and all this stuff. And a lot of our friends in the MMT group too, like I've been trying to have conversations with people that I care about and people that I think are ethical people that aren't just there to grift. They maybe got confused or they got caught up in the hype, because I think like there's a lot of good people that got hypnotized by all these influential people that they respect endorsing this stuff. But look, those people made billions of dollars or hundreds of millions of dollars taking advantage of this bubble. And it's not right. I don't think it's ethical to like look aside from the chaos of what just happened with FTX, Celsius, Three Arrows Capital, Terra Luna, and say, well, that was just them. They're just frauds. But I'm going to go off and do my DAO here now. I'm going to go sell coins to people like DAO or NFT, whatever it is. Like, let's take a look back at the last 2 years and say, like, maybe Bitcoin is what we should have been paying attention to this whole time. Bitcoiners have been saying the consistent message this whole time. Take control of your custody of your own keys. Don't use exchanges. Don't use BlockFi or any of these yield products. Like American HODL was actually, you want to tell the story, HODL, of your BlockFi?
Yeah, no, bet? I think this is an instructive story. So there was a company called BlockFi. It was a CFI company, what we call
I had money in BlockFi.
Oh, sorry.
In May, just in USDC.
Oh, good. Oh, you got it out.
I got it out in May, cashed it all out, and it's now in my
Did I have a hand in that one, Garrett? I think I was texting you and everybody I knew, like, get your money out of these exchanges, out of these lending protocols.
Yeah, I had some in there and I had some in Nexo, and I got both of them out. They were just in the USDC and staked for whatever 8-9% or whatever, and yeah, got it out in May. Happy that I did.
So BlockFi was a centralized finance application that was offering yield on Bitcoin, and it started at 6%, and then it went down to like 4, 3, 2, 1, 0, basically. And I had bet their CEO publicly on Twitter back in February of 2021 when they had a $3 billion valuation and were, firing on all cylinders, rocket ship right to the moon. I said, this company's going to fail 100%. And I know that within, I don't know the timing, but within 10 years, this company's going to fail. He took me up on the bet. We bet a full Bitcoin on it. They're filing for bankruptcy today while we're discussing this. So I won the bet, right? And I think the instructive thing here.
Bitcoin, do you think?
Yeah, we'll see. It's hard betting somebody who's going in
your public vindication, right?
Betting somebody on going bankrupt is like, how do you expect them to pay you? Yeah, exactly.
Yeah. It's like,
not,
hey,
right.
If they have a home in Florida, they can pull the equity out of that to pay you.
Right.
These homestead places.
It's an instructive example because it's not like I'm some particular genius. I just have a little bit of garden variety common sense here. And I go, wait a second, this is a hard cap asset. How are you going to continuously offer yield on it? Where's the yield coming from? Where does the yield come from? And you're going to have to push yourself further out on the risk curve to generate this yield. You're going to have to turn your business into a prop shop that's trading client funds, which they did, BlockFi did. And so, these things just conspire. It's just show me the incentives and I'll show you the outcome, right? And so if you just think to yourself, how are these people making money off of me? You'll do pretty good at navigating your way through, the Bitcoin and crypto ecosystem.
Follow the money. So I have this philosophy that I've developed over time, which is, all right, so people want more financial capital. That's just almost like human nature. Like, hey, if we have more financial capital, we have more feeling of freedom. For a lot of people, they have more self-worth, unfortunately, but financial capital is something people are in the pursuit of. But I feel like if we skip these two other forms of capital, mental and relationship capital, mental capital, ideas, knowledge, wisdom, insights, strategies, tools, relationship capital, people, networks, organizations, mentors, friends, family. Like if we skip just to the end result of like, oh, I have bots trading. Well, you're not getting any mental capital. You're not getting any relationship capital. I think it's going to fail for sure, but you're also not going to increase your value personally because you're not increasing your knowledge. And this is why I hate stock trading platforms. Click when it's green. So it's like, look, you're not actually doing anything valuable in the world when I was at a thing once where someone made their living trading stocks and they're writing a book on it. And my wife's sitting next to me. I'm like, what value does that provide? She's like, well, I can live wherever I want. And I'm like, no, I get what value it provides you. Just tell me what value it provides the world. My wife's grabbing my knee really hard. And I'm like, no, I think that all of these notions, like even talking to someone on Friday, and they're like, hey, yeah, I'm doing this thing where we're trading blah, blah, blah with gold. And he's like, and people are getting 6% a month. I'm like, plan on losing the money. It's going to go away. But even if it works for a short period of time, why do you want to do these things? Like what end user value is created? You don't gain mental capital. You don't gain relationship capital. You're just trying to use technology to game the system, almost like the supercomputer bullshit that was happening with, flash trading. Like another reason why I was pissed at the stock market, because flash trading is essentially supercomputers go in when someone goes to make a buy, they hurry and skim it and send it back to them, and nobody could place their finger on what the hell was happening for a long period of time. And yet, how is it that we're still in this world where people want 6% a month returns for doing nothing but handing money over to it? First off, if that was actually possible, why would anyone take anyone else's money? Because after a few years, I'd have so much money I couldn't spend it. 6% a month over 10 years, compounded, is an astronomical amount of money. So like nobody looks at the economics and fundamentals because greed overrides, And I've been bitten by greed before. I had a shitload of real estate in 2008 because I didn't even like real estate. Like Brad, my story on that's always like, if you own a lot of real estate, you have to talk to attorneys, bankers, tenants, property managers, property maintenance. Like nobody that I'm going, you know what, I can't wait to get on these phone calls today. I'm like, so why in the hell did I want to do it? Only because I was being greedy, thinking it was going to go up in value whether I did anything or not. And that narrative has been fraught with fraud and destroys people's overall value over time, and part of the reason we have a wealth gap. People that aren't in the know give their money to people in the know that don't have the best intentions at heart.
Absolutely. And I think the structure and shape of our money, our money being inflationary, it pushes people, regular people, working class people and even professional people, doctors, lawyers, attorneys, et cetera, into the hands of these sharks on Wall Street. And you basically go sit in an office with a person who you can't trust, who you don't trust, who you shouldn't trust, right? And they're giving you a bunch of bullshit and trying to put you in financial derivative products and, specific funds that are good for them, that have hidden fees. And I mean, Jesus, man. I mean, this is the system that we've set up just to save, just to have a retirement in dignity. This is the kind of system you have to do. It's absolutely crazy to me. And this is another part of the Bitcoin story, is like, we're trying to end run around all of that. And, you take control of your wealth. In a certain sense, Bitcoin is very simple. It's like the kind of thing your grandmother would have told you. It's like, hey, take control of your own wealth, stupid. Don't give it to the bankers, right? They all lived through the Depression and they got that lesson. We didn't learn that lesson emotionally. And so we're constantly relearning it over and over again in markets.
Yeah. I mean, I gave a talk on Saturday and I said, people that tell you high risk equals high return, have you take the risk while they get the return. People that tell you it takes money to make money, have you give them their money, right? While they lend that money out to someone else and make a spread on it. And people that tell you in it for the long haul, they're never in it for the long haul. They're in it for the gains right now. I'm like, so that's the entire financial system. High risk equals high return. It takes money to make money. You're in it for the long haul. That's all a bunch of BS. That's why the system feels rigged. And look, I get Bitcoin's going to be volatile when it's this new, and that's uncomfortable for a lot of people. So, but at the same time, you make such a good point about people feel this pressure because of inflation to go make decisions. Like, I got to invest because of inflation, and if I don't, I'm going to get decimated. But then it's like, I had a professor that was a money manager. He managed $5 billion in municipal bond funds. And he gave us each, like, groups of 4, 50 grand to actually invest, and then we got graded based upon how we did against our benchmark. And one of the things he said was, he goes, if you're not winning towards the end of the quarter, don't make the mistake that a lot of people make with investing. Most people are like that team that's down by 10 with less than a minute left. They're full court pressing and they're throwing up half court shots. Like, they're desperate, and they make bad decisions in that desperation. And unfortunately, inflation is like us being on a hamster wheel, and they just turn up the heat. So they're running harder and going faster, which means more output for them, right? The people in charge, the people that benefit from the labor. It's a really dark, unfortunate system that it kind of sucks to learn about. Like, I wrote the book, What Would the Rockefellers Do? People are like, why didn't you write about the Rothschilds? I'm like, because everyone would have committed suicide by the end of that book. It's a pretty dark book, like, the more you learn, the less you want to know.
Well, and inflation is both a hidden and regressive tax. It's taxation without representation, and none of us get a say in what the inflation rate is going to be. And so that's
right. And if the three of us had troubling. No morality, right? If we had no morality, we didn't have any values, and they're like, we want you guys to run the government. Inflation is your simplest system, has the least resistance, the least, like, it's just the easiest way to do terrible things is to inflate.
Yeah, people can be just hypnotized and lulled and not even notice the effects of inflation. That's really where we are right now. And like Huddle said, this is kind of like a core tenet in a story of Bitcoin. This idea that there's a really great book, this really great Canadian entrepreneur wrote this book called The Price of Tomorrow. I was going to say, what would the Rockefellers do?
Really great
I
book called
just love that book, man. Yeah, so it's called The Price of Tomorrow, and Jeff Booth, and it's about like the concept that, like, how do we transition away from this inflationary money system in a way that doesn't end in like a revolution and pitchforks and violence and like complete collapse of society. Well, we recognize that there's this plan B, there's this like exit hatch, and it's opting in peacefully and productively and cheerfully building out this alternative system that's based on sound principles of a disinflationary monetary system that's not debt-based, that doesn't have inflation as a core tenet. Because the current system we live under right now, the central bankers actually want to inflate away your savings. They're targeting 2 and it's soon to be 4%, I bet, inflation. Yeah. They actually want inflation. And Jeff Booth points this really amazing paradigm that shifted my thinking about 4 years ago when I first read the book, that gave me a lot of hope, honestly, because before I thought, like, man, Bitcoin is the only solution. I got to educate as many people. Like, we're on the Titanic, it's sinking. There's one lifeboat. I got to get as many people on this lifeboat as possible before, we sink, because Warren Buffett's there, like, telling you to stay and listen to the band play. You know, he's like, this is rat poison. Come listen to the band play with me. It's like the whole thing's going down. Of course you want me to stay and listen to the band play. But Jeff Booth gave me hope because he identified this just game-changing way of thinking about it, that technology is a fundamentally deflationary impact, and Bitcoin as a technology is a solution. And while the central banks are fighting the deflationary effects of technology, that's kind of unethical and evil. You can even go there and say that, because they're actually targeting inflation. So there's these two counterbalancing forces where entrepreneurs are trying to like improve our lives and make things cheaper, where if we just had a measuring stick, a money system where you didn't have to go and like seek yield just to survive and have a dignified life, houses would be a lot cheaper, the cost of goods and services would come down, and technology would make our lives a lot better and a lot more affordable. So you would not have to actually see minimum wage keep rising and rising and rising, because the cost of things will come down in line with the advancements of technology. So that just gave me a lot of hope that like maybe we don't need to see a complete collapse like like we've seen so many times before in periods where they just either hyperinflate the money or there's a populist uprising because people are suffering so much. If we do this, if we bring enough people to this mission of like educating about what's important about Bitcoin and how you don't need to be a millionaire to benefit from both the protection of Bitcoin personally and financially, but also the net good of like this change in the money system and thinking about money and just raising financial literacy, maybe we can educate enough people that like it's not the Titanic, but it's there's like something else that just like the ocean is like Bitcoin, you know. I don't know how to finish the analogy. Maybe somebody else can finish it.
I'm gonna send you this clip when I film my comedy special. It was an impromptu, wasn't planned. I was talking about if Wall Street ran the Titanic, that while the Titanic was going down, they'd be like, women and children first, throw them off the boat. They can't help anyone. Like it would just be the wealthiest people being like, get rid of everyone. We get the lifeboats. Like, who cares? Because that's kind of been the system as it's been. So, yeah. So like when you talk about what Bitcoin can do to really save things or improve things, like break that down. Give me some of those.
Huddle.
I'll give you
the measuring stick analogy. This is perfect.
I'll give you the big idea here. So, there's a popular concept called the Great Stagnation. It's been popularized by Peter Thiel. And basically the idea behind the Great Stagnation is, the slogan for Thiel's Founders Fund is we were supposed to have flying cars and we got 140 characters instead, which is a reference to Twitter and information technologies. And it's like, why don't we have the Jetsons style future that we were all anticipating circa 1969 when we landed on the moon? Where did that go? What happened to it, right? And in 1971, we have the changeover from the gold standard. So we go totally onto a fiat standard. We have a much more inflationary economy than we've ever had before. And we can see innovation basically drop off a cliff at this point. And now, yes, there isn't still innovation. I mean, we have the internet, we have Bitcoin. There's been a lot of, innovation in the world of bits, not necessarily in the world of atoms. And, the big idea here is that, we need a deflationary currency for deflationary technologies. And that when you have an inflationary currency, it creates malinvestment. Productive capital doesn't get to the right resources. It's like, the passive indexation bubble that sometimes
short-term of thinking, essentially.
Exactly. Well, think about it. If I'm being pushed via inflationary pressures into investing, well, I'm just going to go into a broad market index fund and be done with it. And so I'm investing in a little bit of everything, but I'm not really making a specific bet on any one technology. I'm not being a real capitalist. I'm just being a rent seeker in that sense. You know what I mean? And investors are supposed to be true capitalists, do the research, pound the pavement, like, go through the prospectuses and read everything and figure out, is this real? Is this not real? And then bet hard-earned money on that outcome. And, the more inflationary pressures we have in the economy, the more malinvestment we have in the economy. And so we're not getting the level of innovative output that we should be getting. And the big idea behind this is that a deflationary currency like Bitcoin would fix this, and we would actually have proper capital allocation, and thus we would get more innovative technologies going forward, and we could finally have the Jetsons future that I've been long waiting. I mean, I don't know why I can't take a vacuum tube to New York. Where is that? I want that.
Well, the aliens probably have all of it. We just haven't received all that data yet, right? Yeah, like so that's a good point. Do you think that Bitcoin, like, how long will it be before like it has transactional value, where it's easy to transact, or it's something that is that part of the near future? What does that look like?
Yeah, so the way Bitcoin works, the way protocol development in general happens, the way the internet stack is, it's in layers. And so, Bitcoin, right now, we think of that as layer 1 Bitcoin, on-chain Bitcoin. The layer above that is called the Lightning Network. And the Lightning Network allows, the main chain only processes like 7 transactions a second, right? And it has a dynamic fee market. So you're not stuck, earlier you said, do I get stuck in the block or whatever? It's like, no, if you want to get ahead of other people, you can pay more money, and it's a dynamically adjusting market. So you can make sure you get in. Or let's say you're moving $1 billion. You're like, I don't give a shit. I'll pay $5,000. Like, put me in right now. I got to move this money.
Right, exactly.
You can do that in Bitcoin. The layer above it is called the Lightning Network, and the Lightning Network is a global final settlement layer that transfers instantly. And when you see this thing work in real time, I mean, it's a light bulb moment where you just go, oh shit, this is the thing. This is the thing we've all been looking for. And it's a really big deal right now. An app you could easily download is Strike. It's founded by me and Brad's buddy Jack Mahler's, really young, promising entrepreneur. Young billionaire, young gunner. I'm jealous of him, handsome kid. You know what I mean? And that's right. That's I know, right? He's just killing it, man. That guy, created a really easy to use, consumer friendly app where you can check out this technology for yourself. And the beautiful part about it is you don't even have to, be Bitcoin native. You can go in and out in dollars if you want to. And it just uses the Lightning Network as Bitcoin rails, right? To get your money around the globe as fast as possible. Pretty cool.
And the other thing too that gives me a lot of hope for the adoption of Bitcoin, and specifically the Lightning Network. Do you
still feel bad, Brad, that you bought that Domino's pizza with your Bitcoin?
Yeah, totally. 10,000 Bitcoins, man. I shouldn't have wasted it. No, interestingly, though, that's a good segue. Laszlo, the guy that did buy the pizza for 10,000 Bitcoin, he was the first person to ever make a purchase with Bitcoin. And he wrote about it. He documented it. He bought a pizza. It's 10,000 Bitcoin. Then, there was this big debate in 2016-17 that like Bitcoin developers were trying to scale Bitcoin in this layered way that Hodl just described. We weren't trying to just like make blocks bigger so that instead of doing 7 transactions a second, we could do 500 transactions a second. That's the way that a lot of the businesses like Coinbase and big Chinese miners and people that had built corporations on top of, Bitcoin as their revenue model was either buying a Bitcoin or mining Bitcoin, whatever. A lot of the corporations wanted to see just increase the block size, make the transactions volume bigger, rather than innovate on compression technology and cryptography and scale it out in these layered ways to try to do more innovation. And it's kind of that fiat mentality that we were just describing, rather than make that long-term, like long time preference or whatever investment in technology. It was just like, well, we have a problem right now. The fees are going up. Let's just make the blocks bigger. And this actually caused a massive civil war inside of Bitcoin, where they tried to create this condition where corporations could just bully developers and users into making changes in Bitcoin. And this is one of the most important things. There was a book written about it called The Block Size Wars. It actually proves that there's precedent in Bitcoin, that it is completely decentralized. Nobody can change Bitcoin fundamentally. The monetary properties of Bitcoin are like locked in stone, and it's the most long-term credible monetary policy of any cryptocurrency, and proves it's decentralized against insiders. So all that to say that instead of kowtowing to these huge influential early Bitcoin companies and investors that had lots of Bitcoin, Bitcoin users ran their own nodes, and we were like, no, we don't want to sacrifice the decentralized properties of Bitcoin to potentially pump the price, or to make your job easier. And what we decided to do was the Lightning Network. That's just what the developers were working on. And Laszlo was the first person to make a purchase on the Lightning Network too. So a lot of it was very unpopular at the time to like come out as a supporter of one side or the other. And a lot of the early guys were like, oh, Lightning's vaporware. Nobody's going to use it. It's a pipe dream. The Bitcoiners are just trying to co-opt Bitcoin and change it from the original vision. Laszlo came back out from dormancy, this like legendary guy, and made a transaction on the Lightning Network and bought some more pizza. So it's like props to Laszlo for being the guy that made the first transaction on both layers of Bitcoin.
By the way, don't cry for Laszlo, because I get the sense he's much richer than all of us on this call put together. I think he's doing just fine. Yeah,
he's doing fine. So I have a client that his COO. We're just getting to know each other because I do these immersions where I spend a full day with someone, and kind of, they're in the financial space, so I was helping them build out kind of their events and stuff. And this guy's like, yeah, when I was in college, where I went to university, there was a power plant, so I just set up a server thing. I mined 90,000 Bitcoin. I was like, 90,000.
Oh my God.
Awesome. He goes, so I sold them for 8 cents a piece.
Oh,
I was like, ouch. He goes, it was so early. He's like, I never thought it would be, amount to anything. I'm like, do those numbers. It's a big number.
Yeah, never do that math.
I've said this before, but every time in like the year 2014-15 that I went to Chipotle, they tried to warn me that the guac was extra, but I just kept getting it anyway. And every time I got the guac, that's like, in today's Bitcoin terms, it's $1,000, So it's like when you start to allocate capital
for that tiny cup of guac.
Yep. Yeah. When you start to allocate capital to
Bitcoin, that'll burn your butthole.
Your opportunity cost becomes Bitcoin, and then you go, man, this sucks. I'm spending a lot of money on bullshit. Probably shouldn't have bought that shake weight back in 2010.
But it's a good party. Bring out the shake weight at the party. It's definitely centerpiece. So
look how strong my forearms are, everyone.
Well, I needed it to even out the other side.
Though,
yeah. My forearms are strong for different reasons. Yeah. Another app too that people should like, Cash App. Jack Dorsey, the founder of Twitter and Square and Cash App. This another like person who kind of aligned. Well, turned out that he was kind of regretting what ended up he contributed to society, I think, with Twitter and the censorship sort of apparatus that ended up coming out of Twitter and cancel culture. And he's made a statement about 2 years ago. He was already kind of aligning with Bitcoin. He started understanding the importance of having a perfect money for the internet, like a peer-to-peer money. And he found his way to Bitcoin, not any of the other cryptocurrencies. He famously was like tweeting, like, not like against Ethereum and other these competitors that were coming up against Bitcoin, as like, it's not decentralized, because he basically lived firsthand what happens when you create a technology that's really cool, but becomes susceptible to censorship and centralization. So he said, if Bitcoin needs it, I will quit Twitter and work full-time on Bitcoin. I believe it's that important of a technology for humanity that I will leave Twitter to work full-time in Bitcoin. And it wasn't until maybe like 8 months later, he actually did it. He quit Twitter and started working full-time on his Bitcoin efforts at Cash App and Square. They rebranded their name to Block. And now they have this whole Bitcoin division where they're making like Bitcoin hardware wallets that are going to be consumer friendly, Bitcoin Lightning Network integration into the merchant processing payment system with Square and with Cash App, and Bitcoin miners, like home miners. So this is a super exciting thing because they've got tens of millions of users and merchants that are actually going to be able to just flip a switch at some point in the near future and be interacting with the Bitcoin Lightning Network. So we're pretty early, as we've been saying, like, people are underestimating Bitcoin and they're overestimating the value of crypto, blockchain, and all this other stuff, because all the VCs are making so much money by selling that narrative. But the real technologists, for the most part, are actually building on the Lightning Network and paying attention more to Bitcoin. It's just
There's something to know here too, which is, I think, important for people, which is, the same way that Brad talked about in Web 2, you were the product. In Web 3, you are the exit liquidity for the VCs. The dirty secret is they use this word short time to liquidity, which means we're first into the Ponzi and we're first out of the Ponzi. And if you don't like it, sorry, right? So you want to be aware of, who you're dealing with and who you're looking for signal from, because these are not good people, frankly. I don't have a problem saying it.
Brad, were you ever seduced? Did any of these coins ever lure you?
Yeah, man, for sure. Like, I know that there's probably people that are listening to this that are in MMT or like just
MMT's
entrepreneurs.
Mastermind Talks is the group that Brad and I have been part of for a long time. So, you're king of acronyms that not everybody knows.
Yeah, I gotta
like
explain
MMT
those.
for sure. Maybe the ESG more people know.
Yeah,
Like
yeah,
I just always forget that, even though I've been on panels where people ask me about it, and I'm just like, whatever. I know how that whole thing really works. Yeah.
So like I came from an entrepreneurial background, so I get the feeling
Were
of
you selling
being.
stuff on Amazon? Is that what you used to do? Sell some stuff on Amazon?
I was driven by trends for sure. I was a short time thinker at some points in my life where I was like, oh, iPhone games is an exciting trend. I should start making iPhone games. Or Amazon, fulfilled by Amazon is an exciting trend. I should try to make some money doing that. So I'm a FOMO sapien. I can admit it. Like I fall susceptible to fear of missing out, and I see trends and I want to hop on them. So in previous cycles, I've
So
for sure was like,
you had some Dogecoin, is what you're saying? And
yeah, I had some Dogecoin. I thought maybe
Did
ICOs
you
could have legs.
There's no way you did, right? There's no
100%, man. In
Really?
2017,
Wow.
I worked for a crypto fund. I came on as the Bitcoin guy, in this crypto fund, and I was part of the investment committee, and we did diligence on like 70 ICOs, and we invested in a whole bunch of them, not my personal money but through the fund. And I was also on their like investment committee, helping them like with Bitcoin strategy and stuff like that. So I had a front row seat. That's why I'm so passionately like hardened against all these scams, because I had a front row seat to it. And I was like, this is the exact same nonsense that I'm reading about and learning about in the financial system. They're just rebuilding the whole thing on blockchains and kind of like trying to say it's like financial innovation. So it really, combining that experience, like having the front row seat, participating in this stuff and seeing how shady it was, combined with the block size wars that I described before, where the VCs actually started to attack Bitcoin and say things like it can't scale, the Lightning Network is vaporware, blah, 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 starting using this ESG bullshit that Bitcoin's bad for the planet, Bitcoin mining is going to consume all the world's energy. And it's like they literally attacked Bitcoin on multiple fronts to pump their bags of their like proof of stake coins, which are green coins. These are ESG coins. So it was just seeing all the like deceptive things that were coming from the VC crowd and the Wall Street crowd, wanting to come inside of this ecosystem and make it like all about crypto and all about blockchain. It pissed a whole bunch of us off. And then, we sort of like started to become more public about wanting to educate that like, hey, like Bitcoin is the thing to pay attention to. We get it. There's some interesting things happening over maybe on Ethereum or Solana or whatever. But really, when you get down to it, the ethical and moral place to be building and educating is Bitcoin. And that's kind of the mission that a lot of us come to. And it's tough because you don't want to moralize
Bitcoin
money.
How much did you pay for your first Bitcoin?
I paid for one hand rub in a McDonald's parking lot. No, I didn't. $10.
$10.
Yeah, $10.
Did you get more than one?
Oh yeah, I bought. So I was at the time I was like listening to Peter Schiff, and I was like, yeah, stock market's a scam. They're bailing out the banks. This is not something I want to invest in. So I'm going to invest a third of my excess savings into gold, silver, and then I found about Bitcoin. So I was like, I'll buy gold, silver, and Bitcoin. And then whichever one wins, I mean, I'm excited about Bitcoin as a digital form of gold. I'm just going to hold on to it. I'll hold on to it all and see what happens. I'm still holding on to the gold and silver and the Bitcoin, but, obviously through the years, I've been hacked and like at exchanges, I've lost Bitcoin at exchanges. I sold half my Bitcoin at $30 that summer because it went from 10 to 30 in a matter of a couple months. I'm like, yeah, I'm so smart.
I'm the man.
I'm so smart. I'm the man.
Which is normal, man. Like it's,
well, and then in the 2017 bubble, I was investing in ICOs too. I was like, oh, I guess this is new, exciting financial technology. I'm going to invest some Bitcoin into this stuff. I lost my money. I lost my Bitcoin.
ICO's like
the
a
money
stripper trying to convince you of this long-term relationship. You know what I'm saying?
It's true.
Especially after American Handle tells us like this whole process of coin, is just basically what's the shortest way to exit cash, and in Web3, you're the exit.
I was the exit liquidity, that's for sure. HODL has a great a great saying. What is it, HODL? The shitcoiner. the shitcoiners are into Bitcoin
Oh,
too.
oh.
I'm saying he's
Oh,
like, you're gonna narrow
yeah.
me down to one saying.
I know. I'm like,
John Hoddle?
I'm a quote machine, man. Come on. No, the saying is that, colloquially we refer to all of these other coins as shit coins. And, we say that the shit coiners are into Bitcoin too. They're just into your Bitcoin. They want your Bitcoin, right?
They sell you the shit coin and they convert that to Bitcoin, is what you're saying?
Exact. Or like, in the FTX debacle, Sam incinerated a lot of people's money, but we're going to find out sooner rather than later, because we find this out every time, that some large number of Bitcoins moved offshore. There's some account and we don't know who's in control of the account. And then they start to move. And then, the FBI tracks them down. And then later we find out what was going on. It's all very exciting. That always happens because, human nature is somebody's going to steal the Bitcoins. These are bearer instruments,
So when you guys heard the news that exchange was toast, like initial reaction, what was that like? Was it?
Oh, I thought it was
funny.
I thought it was funny. I was laughing because I was not materially affected at all. And then the details started to come out, and it turned out like, they were all on amphetamines. There were some details about them possibly having orgies in a Bahamas house together, and it got real tawdry real fast. And I was like, wow, this is very funny and exciting. But materially, I wasn't affected by it. And I thought to myself, of course, this was the inevitable outcome, because something about it never smelled right from the very beginning. Wouldn't you say, Brad? That's a better question for Brad. Brad, do you have any feeling on which exchanges might be at serious risk here, or which?
Yeah.
Which projects?
Or what? Yeah. What are you seeing on the horizon?
So like, yeah, this is one of the things that I always try to weave into the conversation, and I try to put myself in the mindset of that person just coming into the space that maybe came in listening to Gary Vee or listening to like some Raoul Paul type or Mike Novogratz type influencer, Kevin Rose, Tim Ferriss. Like, they're all into this stuff now, and they've pushed this narrative of DeFi, Web3, crypto. Like, they don't necessarily go against Bitcoin. None of these people are saying like, oh, Bitcoin can't work, we don't like Bitcoin. Like, Tim Ferriss brings people on his podcast, like Balaji Srinivasan, who's espousing great things and values about Bitcoin, but then also convinces people to go into DeFi and like buy all this other stuff. So I really did have an analysis from the very beginning of when this bubble reinflated that this was all gray area, really, really toxic, leveraged, non-valuable things that were being propped up artificially with billions of dollars from venture capitalists and crypto funds. And we had clear guidance from the SEC, the CFTC, FATF, all of these regulators that don't want to see the money printer keys just be given away to these like, amphetamine ridden token devs on Wall Street and overseas. Like, they're not just going to bend over and just hand over the money printer keys. They're going to fight. Like, they have the governments, they've got the guns. Like, they're going to actually enforce the laws that they've created to give themselves that monopoly and that control over everybody in the first place. They're not just going to say, oh, I guess Silicon Valley figured out a way to rebuild fungibility derivative swap markets on a blockchain and cut us out, so we're just going to let them do it. Like, they're going to actually come in, enforce the securities laws, enforce AML KYC laws, and make sure all of these things are compliant or just go away. So nobody was considering that when they did all this stuff in crypto and DeFi, this bubble. And a lot of this stuff, man, it's like 99% of it is illegal securities. It's unregistered securities. And it's not to say that we're cheering regulators. This is the thing that bugs me the most, that when people, they just reject this information. They say, oh, you guys just aren't like, you just aren't entrepreneurial enough. You're anti-capitalist. You don't want to see people building on other blockchains because you're tribalist about Bitcoin, or you're cheerleading for the SEC. Look, after everything that went on, if you're still in crypto, you got to take the advice of somebody like me who's predicted all of this stuff was going to happen so far, and consider that maybe the moon boy that like told you about this token having value, maybe that was not so true. Maybe there was an incentive that person had a bag of this stuff to try to sell you, or like a platform to get you to sign up and put your audience on so that he could like make money off you issuing NFTs to your audience. There's always a perverse incentive with this stuff. And sometimes, like, you can get away with it. if you're small enough. So I don't expect a lot of people are going to get like sued by the SEC if you're like a small creator who issued NFTs or something.
They don't have capacity as it
They don't.
Yeah.
anyway.
They can't enforce a wide scale. They can't do it.
But what they're going to do is, because a lot of this stuff was built up just like in Wall Street with over leveraged loans and synthetic derivatives of like the housing interest rates or the inflation rate in Mexico or whatever. That's what they did on Wall Street. They kind of did that again here. And now it's all falling apart because they collateralized it. They borrowed against this illiquid nonsense. And then they blew the whole thing up because they were taking customer funds from BlockFi, taking customer funds from Celsius, taking customer funds from people that were literally just depositing on the exchanges and going out and propping up DeFi markets, crypto markets. Like literally one of the funds that blew up recently, Three Arrows Capital, they had this NFT fund where they were literally pumping the price of NFTs. They had like $1 billion worth of NFTs. Like they were called Starry Night Capital. It was like a side fund where their incentive was to just pump the price of NFTs and get liquidity that way. The same thing happened with Celsius. This is a relatively unknown story, but Celsius took customer money. Celsius, for those who don't know, it's like a crypto.com or like a lending where you can get yield. They took customer money
back in the day on Celsius, right? You could stake.
Yeah, and they had like a website and a wall that you deposit money into it and earn a yield. But what they were doing,
downloaded. I've never done anything with Celsius, but I have it downloaded. Yeah.
Well, they were taking customers' money and they were doing the same thing. They were like throwing it into these DeFi like lending pools and pumping NFTs. They had a guy called OXB1, that was his nickname on Twitter, and he was another one of these just like hopped up degen traders who was taking people's hard-earned money and going and gambling on NFTs and pumping the price of NFTs. He grew the thing to $1 billion, and then when one day like the markets went, he lost the entire account. The $1 billion got lost. They never disclosed it. So it took a year to come out that all this crazy risky stuff was happening. So look, you put yourself in the shoes of a regulator and you're like, already you don't want to see decentralized technology like usurp your power to print money and control the economy, whatever. So you're already kind of like adversarial towards these people and this technology. Now, not only did it blow up, but like it was massive fraud. It wasn't just like the market crashed because it was a bubble. It was that plus there was massive fraud, and like it's like the perfect time for them to come in and put the squeeze on it. And the first time I heard that phrase of is the juice worth the squeeze, from you that the time in Salt Lake City, it was like I'd never heard that before. Like now the juice, it's so juicy for these regulators to come in and like just squeeze this thing, to squeeze the liquidity out of it and show like this was all just a big massive fraud. They're all a bunch of scammers. They need to be regulated. They can't be left on their own. So look, if you're still,
but this should make Bitcoin shine, even if it takes a longer time, because right now all the people that were just throwing some money, they weren't, they're buying shit coins, that kind of stuff. Like they might be out for a while. They might be like, screw this. I got screwed. I hate this. But they'll also look back and forget about this in a few years. Unfortunately, people have a short mind, memory on this, but they'll also see that one will be around and even if it's a different price than what you'd think, because there's more bloody battles to happen in the crypto world, and that it becomes kind of a casualty to a degree of that, it's not going to die.
Yeah, luckily people are starting to get the message, and fear is a powerful motivator. And we've seen more Bitcoin taken off of exchanges this week than at any other week in Bitcoin's history. And so people get the message. People are, taking control of their own keys, their own funds. And, that's a good sign. And I think like Bitcoin's going to come out of this thing okay. That said, we're in a high rate environment. Risk assets are getting clobbered. I mean, you can see that, right? And so it's like it might be a few years. I mean, so, if you're not,
because
right,
I can keep buying a little bit. I can keep
exactly.
I'm putting money in every week. I'm just buying a little bit more each week. So
I think that's a good thing to talk about too, is like, if you're thinking about taking a allocation to Bitcoin, listen, I don't think either me or Brad are advocating that you should be 100% in Bitcoin. I mean, we both are because we're stupid, but you shouldn't do that. You know what I'm saying? And so it's like, risk and position sizing are interconnected with each other. And so risk is usually a sizing issue, right? And so, maybe it makes sense for you to do 1% of your portfolio, 5%, something like that. If you're very stupid, like me and Brad, 100%, or you decide where you are on that gradient, right?
There's nowhere in
businesses,
between.
My intellectual property, real
Right.
estate that I live in, and then Bitcoin. But, hey,
Nice.
Brad, remember when I did my comedy set, something that you gave me made the comedy set, because Brad sent me a Bitcoin on an open dime. Open dime's like the size of my pinky. And so, like, at the time I decided to move it from the open dime onto a different wallet. Like, first off, you have to poke a hole in it with a pin, right? Yeah. So I'm like, okay, I'm going to do this. I poke a hole in it. I can't find it on my computer. I'm watching YouTube videos from some dude called, like,
BTC
Neon
Sessions.
Transformer 69 or something. I don't even know, like crypto unicorn, whatever. And I'm like, I'm in trouble. I can't. And then I was finally like, maybe I should message Brad, but I feel like a jackass that I messaged him. Finally found it 3 hours later, got it moved over, but I was a little nervous. First off, I couldn't find that thing in my safe, the open dime. I'm like, I had to pull out everything in my safe to find the thing.
That's great.
And then poke the hole in it. I was like, Jesus, like, this is crazy.
The dirty secret about that is we like to, I have some here. I like to give them out just like Brad does, because the reason I give them out is because I know that they're very difficult to take the Bitcoin off of. So it's a forced hodl. You got to hodl it,
Hodl. There you go. All right.
The thing is, they got these new ones. I don't know if you can see it or not, but it's called a Sats card, and it's like a more like, easier user interface version of like just holding physical Bitcoin, because it is cool to just have physical Bitcoin. It takes it from the digital world on that device. Like, the Bitcoin actually sits on that little like thumbstick, and they call it a prison wallet because you can just shove it somewhere when you're trying to escape. This one would be uncomfortable.
This is a physical Bitcoin also. This is called the Cassacious coin. It's sort of a collector's item in the Bitcoin world. Nice. This is one That's Bitcoin. Cool. Yeah, they didn't make these for very long. And the guy, I think, some federal 3-letter agency was like, you got to stop making these. So, there's only so many of them. Sort of a collector's item. Cool thing.
Nice. Well, guys, thanks for spending some time with me today and enlightening me and the other viewers, because, like, I want to continue to have people look over my shoulder and learn and know that I don't know a lot about this world. But, even when I was talking at the slowest speed I've ever spoken in my life on Brad's podcast when I was inebriated, I was very pro Bitcoin. And he said he was, that was like the first time I think I was like just super public about it. I mean, I think I started buying some in 17. That's what it took me. I learned about it. I don't know when you first told me about it, Brad, but 2017 is when I finally started buying it. So it took me very, very, I feel like an old man because it took me so long, because in other areas I would feel like I would be, at the forefront, but not in this.
Did you feel, Garrett, that like maybe because you were educating and like kind of these conservative strategies, all these high net worth folks, that maybe you shouldn't like send them out on the risk curve to go buy Bitcoin? Is that one of the things that you were thinking about?
Part of it, man, because I'm like the risk mitigation guy, not the risk taking guy. I'm the, hey, what's guaranteed? If we could save you on tax or interest or remove fees or, remove duplicate coverages with insurance. So I was like all about efficiency. But the problem is with inflation and centralized banking, like I've been down that road, read books, like been frustrated about it. Like it was only a matter of time. But I also got all the war stories of people losing something on a Chinese exchange or saw the amount of volatility. But it was actually, we had an event in 2017 and I had someone come talk about Bitcoin. It was like 3,000 or 4,000 at that time. And everybody event bought a decent amount and we're very thankful. And I was like, that's kind of cool. Even though I didn't make anything, I didn't endorse it. I was just like, you guys need to learn about it. And I'm bringing other people to teach you because I'm not the best teacher of it, but I want to have other people, you know, that are dedicating their lives to this talk about it, because otherwise I could get out of my depth pretty quick. And in 2017, I couldn't go to an event without someone asking me about it. Every time I spoke, every panel I was on, it was a big thing. And I was like realizing a lot of what was happening to me was greed, not logic, because I was like, I really need to get involved. I started to get a lot of FOMO. So I actually took my time longer than I normally would, just out of like, I have to be able to explain this. I have to be able to understand this. And I remember the first time I went to buy at $600, I was going to put 25 grand into my account. It's like, explain what you're buying. And I was like, all right, we're not going to do it. I can't even explain what the hell this is. Like it was, you know, I didn't really know enough, but, and it would have violated everything that I teach. But I still feel grateful that I'm in this early, that, you know, all of the chaos that has happened has created more opportunity to be able to, you know, opt into this in a bigger way. So.
Awesome. Well, I'm super glad that you're willing to educate people about that, because as I'm, you know, you probably could tell, like one thing I love to do is try to educate and help as a Sherpa in some sort of way, people navigate this thing, because people who can influence other people more so, not me, 'cause I'm not the guy to speak to a million people, but I know you're super influential, and like, I would rather see you make the right decisions and navigate this bubble in a way that's going to cause you the least amount of reputational risk and harm. So sometimes I'm texting my friends that are like posting about NFTs. I'm like, what are you doing? Like, maybe I'm acting a little bit too much like a boomer.
But I'm, you know, I confess, I have the NFT with Aoki. I'm really happy I did it. Like, it works for me and the situation that I'm in and what that gave me. And I don't know if I'd have been able to do it without, but at the same time,
did you do the song yet?
January 21st.
Nice.
This weekend, I'm going down to watch my friend do a song. He's one of the 4 Prism holders, so I get kind of a sense of what I could prepare for and what it looks like and all that kind of stuff. And I've been to a couple shows, so it's been one of those like really cool experiential things, but you know, also from discretionary funds. So it's not like you know, it's not like I'm not banking my future based upon this transaction or what's happening there.
Hey, I mean, if you and Steve make a banger, I mean, sky's the limit, right? You know, think about it like that.
I mean, at least it will be the intro to my comedy special.
Right,
at least,
there you go.
Like, I can impress my kids for a minute, you know? I mean, and who knows from there. If it's a banger, let's just know that he did 95% of the work.
Right.
I did 5%, right? We know what's going. We know who the pro is. Well, thanks, guys. I really enjoyed it. And, you know, Huddle, we kept pretty good behavior, really, I thought.
I think so. I think so, totally. You know, we'll have to get drunk one of these days in person, so just, you know.
Yeah, I mean, I don't think I will ever get as drunk as Brad saw me get, like, at that point. I got drunk, dude, that was in 2019. The first time I got drunk since then was just a week ago after one of my comedy shows. I was just like, hey,
it was
and I was like, I had to go to bed early. You know,
it was miraculous, man. I've got that footage like safeguarded away. One day I'm just gonna like auction it off
and make fun of it. You know, we'll do like a reaction video, the 3
there
of us,
you go.
And just be like, yeah. All right, guys, take care.
All right, man. Garrett, thanks for having us.
Hey, really good to meet you, man.
Great to meet you, sir.
You know what I really like is comments. Even if they're harsh, even if it's making fun of my hair or how much I interrupt people. But what I really appreciate is thoughtful questions in the comment sections that provide content and ingredients for me to share. Some of my favorite things to do. So if you want more, if you want something personalized to you, go ahead and type that in and click to this next video where I've done this for other people to give you an example.